RockCreek CEO Afsaneh Beschloss joins us now with her outlook. A perfect day to have you, Afsaneh. What do you see as kind of the read-through from yesterday's CPI, today's PPI with regard to Fed policy? Are you more in the Larry Summers camp of they need to do 100 basis points, or in the Gunlock camp of 25 would be sufficient, so not to tilt the economy into a full-blown recession, or with the majority, which of course believes 75 basis points is on the table next week?
So, Leslie, the numbers were certainly very tough, and the economy is in a tough place as we speak. Household net incomes are moving up, but at the same time, from a real point of view, they're not. Net worth, household net worth is down, about $6 trillion in Q2. You have households borrowing more. And also, you're starting to see, for example, in San Francisco, that had a very heated real estate markets, you see that real estate is starting to get a little bit more soft. Now, against that backdrop, the numbers did shock the market, no question, yesterday. And I think looking at it at RockCreek, at least what we're seeing is that they have changed one thing, which is the terminal Fed rate. If we thought as of before yesterday that they were going to end up closer to 4, we probably think they're going to be above 4.5 when we end this dance. And I think the very big question is whether it's going to be going more into retained earnings or real wages will end up being higher. Why does that matter? Because that will determine what kind of recession we come out of, or a growth scenario in the economy, which will have very different implications. Let me just end by saying we're still at 75 basis points right now for next week, but probably another 75 basis points for November. So I agree with Larry, you have to be careful, but I also think that it's the terminal rate we should be looking at.
So where do you see this playing out? Is it necessary to push the economy into a recession in order to get inflation under control? Is that just a collateral aspect of what's going on in the current environment?
I think that's what we're hoping the policymakers will manage to avoid. They have started late in the game of increasing rates so that we are where we are today. But I think there's still hope that if the increases go on as expected, if the economy starts showing signs, and it's already showing signs, even if not in the numbers we saw yesterday and this morning with PPI, that inflation will start probably a little bit later to be under control. I think we can avoid a recession. But again, like I said, if we end up with slightly higher wages and slightly lower earnings, not good for markets maybe, but I'd be good for growth scenarios. So what markets might like may not be good for the overall growth of the economy, but lots of opportunities at the same time to invest in.
Such as?
Such as, Carl, for example, you have to look at where the policymakers are going. And there are two areas that we keep on hearing. And a lot of people have been talking about, what's going to happen to the tech sector. But a lot is happening on the climate side as we're sitting here together. So while everything else is feeling very gloomy, for example, climate tech is having a huge amount of growth. And there's so much investment going in from startups to broader markets. Yesterday, in fact, one of the very few market participants that did well was a agriculture science company. So if we look at the trends, I think there's two that stick out. One is things related to climate. Water and ag are going to be, and food are going to be resources that are in short supply in the short, medium, longer term, most likely. So investments in those areas will be interesting, and also biotech that got killed over the last few years. And there's a lot of potential there.
Shepard Smith here. Thanks for watching CNBC on YouTube.